Man, look at this dirty piece of price action. It's lovely, isn't it? Highs taken from the previous highs there, right there. Taken, and ever since then, highs, lows, highs, lows, highs, low. And that was the lows for this macro range. So you would classify this high as the dealing range high, and this low as the dealing range low on the macro time frame. Right? On a monthly basis. That's the reason why it's on a macro time frame. Okay. Now, once that low was created, at that point in time, I'm looking at the point in which maximum pain could incur. And area 1, area 2, but most likely area 3. If you were to take it one step at a time, we've got the weekly, so we're on a daily time frame, but we've got a weekly imbalance there, which was respected, as you can see. Traded up into that area, respected the fair value gap. Dilly dally, buy side taken, range bound, and then we obviously shoot off, and this is the opening gap that allows us to run and continue to run on buy stops. But we failed to get to this high there, which is at 1.28938. Slowly got up there, and our area of importance is 128,177. Friday we sold off, taking 3 days worth of sell stops. Didn't really get to the Monday, which is the open for this week. This is this week's price action, right? This is last week's price action. So the low for last week is there, but there's relative equal lows right there. So, and it also coincides with a previous imbalance in price, right, which was respected there. So if you were to trade into that area, I would take that, trade into a previous bearish order block, which is located right there. And obviously we could take off to the upside, but with dollar increasing in value, right, that could mean that we could continue down to 1.26479. Our first area of interest would be the lows at 1.26807. My second point of interest would be the monthly order block at 1.26479. I'm not shying away from a potential spike to the upside, maybe even trading up to 1.28, but I would not want. All right, I'm going to say equilibrium. So the consequent encroachment. So let's have a look at this one more time. The consequent encroachment, right? Is this still relevant? Because it's from a monthly perspective, right? Highs, lows, equilibrium. So with that being said, anything higher than 1.28334 is a negation of my bias, and it's back to the drawing board. But I'll be looking for a continuation to the downside, attacking number 1, 1.26807, and then 1.26479. So that is my point of interest, and that's what I'll be looking out for this week. Honestly, guys, I don't mind being wrong, but what I'm doing is using the same logic over and over again in order to be more consistent. I know when not to pull the trigger. So I could be wrong, but it's about knowing when I'm about to be wrong. So I'm placing my analysis now. It doesn't mean I got my hand on a silver ball or whatever the bloody saying is to anticipate where price is going to go and is going to get there. I mean, my strike rate says it all. All right, if you have a look on my trading view account. But when we see price action open when we see price action print on Sunday and Monday, that will give me a better idea as to where we're most likely to trade down to. So this is on a daily time frame. Let's have a look at the hourly time frame to get a brief understanding of what's going on. So you've got the low for this week, we've got the highs for this week, and we've pretty much been range bound for the majority of this week, apart from Friday, 8 o'clock, which we see in the massive sell-off and price action taking out sell stops. So sell stops right there at 1 point. Oh, bro, I need to clear this. I need to clean this up, really. I do need to clean this up. 1.26940. That would be my first point of interest. But from a daily perspective, I'm having a look at it from a daily perspective. 1.26800. Basically, 1.26800 is my first point of interest from a daily perspective. If scalping, then the weekly lows would be my first point of interest. Now, I'm not shying away from something like this occurring. You could see something like that. Even possibly this, but I want to see a fucking spike. I want to see a spike, and then obviously milk all the way down to the bottom. Excuse my French there, guys. So yeah, with that being said, I'm expecting a sell-off in price action